Namaskar. Greetings, friends. It is Saturday, the 5th of April 2025, and it is time for my weekly analysis and a look at the week ahead. Last week saw a major world event take place. The President of United States called it as Liberation Day when he announced a new regime of tariffs for trade. That shook the markets and it resulted in a massive sell-off. Just the S&P 500 lost close to $2.4 trillion in value. That is massive. It is the biggest decline since the COVID-19. It is in these kind of times that the value of balanced diversification and good risk management practices comes to your rescue. It is also a time to take a harder look at your portfolio and maybe use this opportunity to shuffle out some of the weaker stocks and buy some very strong companies which are now available very cheap. In this episode, rather than looking at specific stocks, I will take a look at some of the indices and see whether they are in technical areas where a bounce is a possibility or there is further downside to be had in the next week. But before we look at the charts of various indices, a quick word of statutory disclaimer. The information being shared in this video is for educational and informational purposes only. It should not be construed as an investment advice. Individuals are encouraged to do their own research and assume full responsibility of any actions taken based on the suggestions provided. The first chart we look at is SP 500. This represents the top 500 companies in the United States. A cursory look at the chart suggests that a major uptrend, which is indicated by this line, has been broken here. But what is quite telling is that it actually formed a double top here. So as you can see, the swing up, swing down, another push up, which could not be sustained, push down, and then break of this neckline as well as this trend line simultaneously. So at this break point, it was clear that the correction was going to start. But what made the correction really strong was this announcement by Trump on the 2nd of April here. So now what we need to see is how much more the market might fall and whether there is a chance of a bounce. This is the daily chart. The RSI suggests that it is already in oversold territory, which is a reading of 21.54 at the moment. If I draw a Fibonacci on this, the price action has just breached the 50% of this entire move from here, which started in October of 23. To me, this suggests that there is a further downside possible right up to the point of 61.8% retracement, which incidentally also aligns with this support area here. However, since there have been 2 or 3 consecutive days of downfall, there is a likelihood that people trying to buy some of the good stocks becoming available relatively cheaply, it might see a little bounce before it continues further down. In such scenarios, it is impossible to tell when the bottom will be so that you could do bottom fishing. I guess the best strategy at this point in time is just to wait and watch, look for the signals which indicate that a bounce or a reversal is coming your way. I see a few possible scenarios here. Scenario number one is that we see a bit of dilution in the rhetoric coming out of US and an openness to come to negotiation table with the countries that want to negotiate. Now that will create a bounce. And if that happens early in the week, then a possible scenario will be a bounce back, which could go something like this. Now, this kind of a scenario is a bit of a pessimistic scenario where a new declining trend, something like this, will start forming. But even if that doesn't happen in the short term, the chances of this area, which is the point of major sell off, and also at the 23.6% retracement, that will act as a resistance point now. So if a bounce back happens, then this will be the point when you might want to get rid of some of the weak stocks and then wait for a downswing to buy back the stronger ones. In the meantime, just sit on cash. I think major new investment should come only after this point is breached to the upside, which will show continuation of the overall uptrend. Another possible scenario is that there might be a little consolidation here in this area. before it continues the downfall right up to this point of 61.8% retracement. So the second scenario is something like this. It does a little bit of consolidation right where the price action is currently sitting, then does a further leg down to visit the next Fibonacci retracement area, which is 61.8% of this entire move, before it bounces off to visit this declining trend line and then another move down. So that is, these are the two possible scenarios I see. In the very short term, I don't see the big bullish move continuing. So that's my view on SP 500. Next, let us take a look at the FTSE 100. FTSE 100 picture is also very similar. Although on the FTSE 100, instead of a double top, we see a head and shoulders kind of a pattern. If you will just follow me, head here, left shoulder, right shoulder, and this is the neckline. The neckline was broken on the 2nd of April. So, as far as FTSE 100 is concerned, it didn't have a telltale sign like the S&P 500 had. It literally broke on the day of the announcement. But nevertheless, it has broken a head and shoulders pattern after a prolonged upside. So this point will act as resistance going forward, at least in the short to medium term. So keeping that in mind, let's just analyze our picture. And let me draw Fibonacci from the bottom of what I can see here up to the top of this. Even on this chart, we see that the 50% has already been breached. Okay, so there is further downside. In this particular case, the 61.8% coincides with a nice area of demand and supply imbalance here. So my suspicion is that it will visit this area before a good bounce happens. 7870 area. So that is the area where I expect a bounce back. The RSI is already heavily oversold, but again, you cannot just rely on RSI because of the steep downslide. What we need to now see is how the next few days unfold, whether there is a consolidation pattern before another leg down, or the RSI starts showing signs of going back up whilst it makes a small leg downward. But what is clear, at least for the foreseeable future, is that this area will act as a resistance. So, in terms of a possible scenario for this, I expect this to do a little bit of maybe sideways here and then come down here and then revisit this area and make another leg down here. In terms of decision making, if the index starts going up, I think the time between here and here will allow you to readjust your portfolio to get rid of some of the weaker stocks and buy some of the stronger stocks which are up for sale in this time. But in the short to medium term, I see a slight downtrend developing like this. The other positive scenario could be that this line that I've drawn is breached to the upside and the overall long term uptrend will resume. But in the short to medium term, I will exercise caution and make sure that I do not do heavy investments until this declining trend line is broken. So that is FTSE 100. Lastly, let us take a look at USA Tech 100. Similar story here as well. Unfortunately, the entire market was like this. So you will see a similar picture. Again, on this chart, a major uptrend. I'm joining this point to the low here and to the next low here. It was broken on the 9th, 10th of March. In case of US Tech 100 also, there was a signal even before this major news came out. I think the learning for me is I need to keep a track of the indices as well as a big picture. And if the indices start telling you a story, then it is worth paying attention to that and start consolidating the portfolio in such a manner that it doesn't see the kind of downswing it has seen in the last few weeks. If I draw a short-term uptrend here as well, this was broken here, and then a few days later, the major uptrend was also broken at this point here. Also, after breaking, it revisited the rising trend line shortly before falling down again, and then this thing, 2nd April, happened. So it is roughly making a similar story that since this is broken, I see a short-term downward trend like this. A possible scenario here will be, because it is already in oversold territory, I will expect a bounce back, just like I said for the other two charts. It is not too far from an area where it could see bounce from, which is at 61.8% of the Fibonacci retracement, and it also is aligned with this big spike here. So as far as USA tech is concerned, my view is that it will see a bounce upward before the other two. Okay, the other two still have a little room to go down, whereas this is already fairly close. And with the RSI in oversold zone, if I draw the lines here joining the two lows and I compare with the lines joining the RSIs, I don't call it a classical divergence, because classical divergence will be just opposite direction. But the fact that it saw a steep decline here and not such a steep decline here in the oversold territory, it tells me that it is ready for a bounce. And the fact that the price action is very close to this area of demand supply imbalance, as well as the 61.8% retracement, I will expect a bounce sooner rather than later on this one. But like the other two charts, when the bounce happens, I expect the bounce to go like this and back down again. I have a feeling that this downtrend, which started here and was confirmed by this lower high, will continue for a while. But you never know how the markets behave. The only predictable thing about market is that it is always unpredictable. So with that in mind, I close my analysis for today. Hope you found this useful. Exercise caution. Make sure that you manage your risk well. Stay tuned to what the market is trying to tell you, and have safe trading. With that, I conclude my analysis for this week and a look at the week ahead. Hope you find it useful. If you like the contents of this channel, please subscribe and also share with others who might find it useful. Thank you. Namaskar. See you soon.